Trading isn't easy. In fact, most people who try to trade fail. It's estimated that upwards of 95% of people who begin trading lose. Sound familiar? Is this you? Have you blown out your own account, spent hundreds of dollars on failed prop challenges, or ran a funded account into the ground? Well, you're not alone. In this video, we'll identify 3 characteristics of losing traders and show you how to overcome them. If you want to quit trading, watch this video first.
Trading is hard, and most people make it much harder than it needs to be. This is well documented in a 2010 study by Barber, Lee, and Odeen. The study states that 80% of all traders quit within 2 years of beginning. 40% quit after 1 month. Only about 1% of traders consistently profit. So why are the failure rates so high? The answer is very simple. People make the same mistakes over and over and over again. Humans are creatures of habit, and many traders lose in exactly the same way.
Struggling traders typically share one or more of these 3 characteristics: arrogance, greed, and disorganization. If you can eliminate these things from your trading, then you'll improve your chances of winning exponentially.
In life, millions of people think that they know everything. You see this arrogance all the time in business, politics, and even at the gym. Well, guess what? No one knows everything about the markets. Anyone who thinks they do is delusional, arrogant, and destined for failure. If this is you, it's time for a reality check.
When you trade, you're going against the smartest, richest people in the world. Now, this has been the case since the financial markets began. When money is involved, the competition is keen. It doesn't matter how high your IQ is, how deep your pockets are, or how much success you may have had in other areas in life. If you do not respect the markets, you'll very likely end up quitting. Now, there's good news. The key to overcoming arrogance is simple. Educate yourself. Do some reading. Now, these 3 books are a pretty good place to start. We've got Trading in the Zone, What I Learned Losing $1 Million, and Reminiscence of a Stock Operator. Now, when you're done reading these 3 books, you'll have an understanding of what the markets are, what is possible, and what you need to do to succeed. Greed. The Oxford Dictionary defines greed as being an intense and selfish desire for something, especially wealth, power, or food. Greed leads to many problems for traders. In fact, it may be the single largest detractor of profitability.
The lottery shows us what greed really is. Studies confirm that the poorer somebody becomes, the more money is spent on lottery tickets. Why? Human nature. Greed is the idea that nothing else matters, only the big win. In reality, greed and desperation are close family members. If you're greedy, then chances are you're also desperate. Now, this happens to traders all the time. A loss is taken, and the only thing that matters is hitting the big winner to make up for the loss. If you're going to succeed in the markets, then you have to stay out of this gambling mindset. Stay grounded. Focus on incremental gains and solid risk management. Don't take losses in anticipation of a big winner saving the day.
All right, think about it this way. If you average a 3 pip gain per day, your monthly gain is around 60 pips. Your yearly gain is in the neighborhood of 720 pips. Establish your consistency first, then pile on the leverage. Now, 720 pips may not sound like much, but you can leverage those measly 3 pips a day into any salary you want. That is how you win in the markets. Incremental gains via patience and discipline. In the markets, anything is possible. And if you aren't organized, you don't have a chance. Pilots are required to complete pre-flight preparation before ever leaving the ground. Surgeons conduct pre-op procedures before making the first incision. Lawyers work through a pre-trial progression way ahead of court. It's the same thing in the markets. Winning traders have an organized plan in place before they ever place a trade.
The bottom line, to succeed as a trader, you need to know what you need to know before you need to know it. You need to be organized. A simple trading checklist can help. On it, you're going to find how you're going to enter the market, how you're going to exit the market, and how much you're going to risk on each and every trade. Get organized. By simply streamlining your approach to trading, you beat 95% of those losers. Make a horse race out of it. Know what you're going to do before you need to know what to do, and then do it.
All right, it's quiz time, sponsored by our partner broker, Switch Markets. Which is the most important component of your trading success? Is it A, discipline, B, risk management, C, strategy, or D, a comprehensive trading plan? If you think you know the answer, leave a comment below.
At How to Trade, we talk to struggling traders every day. People just like you who are facing the same problems that you are. Guess what? I've got good news. You don't have to lose forever. You can become a winning trader. The only way you truly lose is if you quit. Now, if you need some help getting on the right track, check out the How to Trade Trading Room. We've just launched a new series of strategies. Are you interested in trading the Piranha, the Pendulum, or the Trend Rider? then click the link below and get in the game. Now that's all for now. Trade the action well. Don't quit. And we'll see you in the markets.